Hello, fellow traders. We're in the third month of the year already. Can you believe it? Welcome to the live show again. It's the 4th of March. It's Tuesday. Can you believe it's episode 47? Shun will have done 50 live videos for you guys. It's insane. Most traders lose money, and if you're unsure, you probably shouldn't even be trading. Always put up the risk disclaimer, just so that everybody knows that trading is insanely risky and it's a 50-50 game. If you guys hear any strange sirens in the background or warning sirens and people speaking on speakers, that's pretty much because I live close to a nuclear power station and they're doing their wee testing thing today, so no big deal. You shouldn't hear it because I think this mic that we have here is pretty directional. It's not one of those big, fancy, thick, massive, beautiful things that the other guys have got, just a standard old mic. So yeah, just in case you hear that in the background, nothing's going wrong. It's all fine. That's hopefully those guys who watched from the start, because there's really no one here yet. We shall see. We shall see what happens. If everybody turns up, and then we'll get going and we'll get started pretty soon. We'll start talking about all those wonderful things. Yeah, I only see winners in the market, so I wonder where all the guys that lose are. We're going to talk about that today. We're going to talk about all these winners. So many winners in the market. It's quite insane. Yeah. Keep it simple, guys. Keep it easy. First trade of the day we had yesterday. We actually lost. That wasn't great. That was a really bad start to the month. But I'm going to pull the statement for last month, and we'll have a look at that. We'll see how that went. See how that goes as well. Let's see if everyone pitches up at 11 o'clock and we can have a wonderful trading start to the day. We'll see what it looks like. Oh, nobody here today. Maybe it's going to be one of those days. Well, if no one pitches up, it'll be a short day for me. Short and peaceful. But most people do. Most people will come soon. Right, so we've been having problems with the internet as well. You know, the nuclear power station down the road that's sending off those sirens at the moment is actually, they've got 2 reactors and both of them have shut down because they were working on the first one and the second one tripped. So I don't know, maybe they're just testing to make sure they can warn us if the world ends. Should be interesting at the end of the day. Anyway, we'll go and have a look at our trading just now. We'll see what the news is. And we'll have a look at your trade sizes and whatnot and see how we can work that out. Big issue in the market is people don't understand that 70% of traders do lose money position trading and 99% lose in the day trading area or scalping space. Everybody seems to think that it's quite easy to make money in the markets, and it really isn't that simple. We don't have any trades on the go at the moment, so we're waiting for you guys to bring us some trades and talk about trades, because as you know, when we have the trading live shows, you guys get to see if there's any trades that we can take and put on. But I put on a trade for us yesterday, and I started the month with a loss for us. I made a boo-boo and lost us $248 yesterday on the Australian dollar, Canadian dollar. I put a sell on it and it went into a buy. And clearly that was not a good idea. Clearly that failed. So first trade of the month went pear-shaped. Sorry about that, guys. It's just how it goes. It's one of those things. Markets are 50-50. Some you win, some you lose. As you know, you have good days and you have rough days. So yesterday was Monday, and it was one of those days, yeah. But we'll have a look at the statement when everyone's here. We'll check it out, and we'll see how it's going. First time, hey Grizzo, welcome. Good to have you on board. I'm glad to see you here. I'm looking forward to the journey as well. Morning, Danny. Good to have you here. We'll go and have a look at the statement. We'll go and see what that's all about. But before we do that, let's have a look at, let's see what's happening. US 500 is bearish. Are the markets going to crash? As I said in the weekly video that I put out, not yet, guys, not yet. Worst case scenario, I'm waiting for this to get down to the 57 and give us a good entry level. But like Bitcoin, if you look at Bitcoin, gosh, I don't like crypto. As you know, I don't invest in crypto. But what a great trade. I mean, if this comes down to the 70s, wouldn't it be fantastic? Because it'll bounce up and go straight back up to the 100,000, making us a bit of money. Today's trade of the day, US dollar, Canadian dollar. And here we are, guys. It's coming out of the 144,500, the exact spot that I was looking for. It looks like we might actually get our trade of the day at the end of the day. So I think because this is on, I think let's take this trade. Let me just see, what did I put the stop loss at? I put it at 1. Let me just see how this is going to work out, because I'm going to put it at 146. Let's just see what that looks like. What have I done here? Let's take that out. Okay, let me just do this. Show what I've done here. Oh, I've got to put it on a sell, that's why. There you go. That's a bit happier with me. Okay, let's just take a look at what we can do to keep it down to the 1%. As you know, we trade with a 1%. I'll leave it at 216, that's fine. Let's have a look at take profit. Where should take profit be? 142.5. Let's see, 142.5. There's not much profit in that. Let me just see, 146,000. The risk to reward's not there, eh? There's not a lot of risk to reward, but we could get 142 as well. Let's just see how that looks. It's not, if we're going to have a 1-to-1, it's fine. You know, it's not the end of the world. And we'll take a sell on that. Yeah. Let's take a sell on that. We're putting it in. There we go. US dollar, Canadian dollar. Sell in. Right. Okay, so a lot of viewers here today, but I'm going to go and have a look at the statement anyway. Let's go and check it out. Let's go and check out the news. Let's go and see what's happening on the news. I did open a little bit earlier than I usually would, so I'm not expecting everybody to be here as we stand at the moment. It's not a big deal. I just want to pop over to the news area and let's just have a look at that. Look at this. Trump tariffs plow ahead, potentially surpassing entire first term. He's also stopped all funding to Ukraine. He's really going to town. It's going to town. Nvidia is at its lowest levels in a long time. It's one of my investments. If you're an investor, I would start looking at buying into that. Start adding to it. Equities whipsaw, yeah, they're all over the place, but it is a little bit bearish at the moment. But I wouldn't say it's the end of the world just yet. I'd be very careful of calling the end of the world just yet. Nvidia also has a big part to play in the movement of the market, so do be cautious in those areas. I'll be adding to that at the moment. So this is February's statement. So as you can see, the first 3 trades were a loss last month as well. First 3 trades went pear-shaped. And then it picked up again, and we had some break-even wins from trailing stop losses. Then we had a total break-even, a better win on the 1 JPY, and the Euro US dollar gave us a better win, more of a 1-to-1. We didn't really get many 2-to-1s last month. US 500 loss, that was on a Friday. I remember that trade. The New Zealand dollar US dollar was a win, very much trailing stop again. Euro Great British Pound. I do believe I shut that down quickly because it wasn't looking good, and that was a good decision. Australian dollar one, also a trailing stop. And gold, another trailing stop, but on a Friday afternoon when I didn't really want to hold it in, and that one gave us another win. So overall, for the month, about a $360 profit, which just shows you how difficult it is to trade with $25,000. It's insanely never easy to make money in the markets. Why people show you wins and wins and wins and wins and wins after wins, and they never show you the losses, and they never explain to you that it's not that simple. They always show you, oh, I made $20,000 in 3 pips and God knows what else. It's not the way of the markets, guys. So we went up to 24.8 again, and we went back down to 24.6 again with my loss yesterday. So yeah, it's fine. It's getting there. Now, let's go and don't forget, guys, the account we're trading on is this funded trader account, funded trader markets. And also, if you want one, there is a link in the description for you guys there as well. If you want one of those accounts, they're quite cheap, $89 for a 25,000 now, which is insanely cheap if you think about it. I just want to go and put us back on the charts. Let's put us back on the charts. There we go. And we can go and have a look at the charts. Okay, where are we? Right, so we're open, right? We're open. Prayosh, good day today. Good day. How's it? Welcome, Herc. Hey, Rob, how do you exercise what setup to take between pairs that move similarly? For example, have you ever been in a position where the setup works on the other pair, but not the one you chose? Yes, you do get the situation. I'll use these two as an example. Euro, US dollar, Great British Pound, US dollar move the same way very, very often. So I won't take two trades on those two. I won't take a trade on the Euro, US dollar, and the Great British Pound, US dollar, for the simple reason that I'm just overlapping myself. And my whole strategy is, you know, to, out of 10 trades, win 5, lose 5. So if I take 10 trades with the same sort of pairs, then I'm sitting with a situation where I could lose all 10 trades because it'll move the same way. Because let's say they're all US dollar and, you know, they go because the US dollar collapses or something. So I don't want to do that. I don't want to have two trades the same if I can help it. I'd rather separate them completely. I have had situations where trades have moved in opposite directions, and that's simply because, for example, if the Euro US dollar and the Great British Pound US dollar always moves together because they're similar, but let's say the Great British Pound was to collapse for some odd reason, then obviously it's going to go in a different direction to the Euro, and 9 times out of 10, that's where your situation is going to change. So yes, you've got to be careful of trading on the same products all the time. That can be an issue. That's our short trade. That's the one we took. I was looking at long on gold, and now, oh gosh, yeah, that's why I didn't take it. I didn't take it this morning because the risk to reward just wasn't there. There wasn't a good risk to reward on it, so I didn't take the trade for us. I left it out. Okay, so just so as you guys know, we've left that trade out. I wanted to take it this morning when it was around 29, so we would have made some money now, but I was looking at the risk to reward. I would have had to put the risk down here on the long, and the rewards like really not there. It's just 50 points. It's actually against us. You want to buy Brent? How's it trading? Brent is pretty much in a really, really good spot to buy, because as you know, it trades in this range between the well, let's say the 65 and the 100, but you know, 70 to 80 at the moment. So yeah, I wouldn't be adverse to taking a chance, but what I would do, Fred, is I'd wait just a little bit, because at the moment it's pointing down, big red candles going all the way down. So I'd wait just a little bit, because what you're going to get here, when you get a turnaround, maybe a green candle or something on the short term, you're probably going to get up to this 73, 74 level here, where there is a supply of money lying, and also it's sitting on this trend resistance, right? So you are expecting it to go back up there sooner rather than later. There's the money. The money's lying here. There's the trend resistance lying there. So this is probably going to bounce up and go there. But I'll wait until I see a green candle before I buy. Don't catch a falling knife. Just remember, falling knives are sharp, and they can cut you. So if this goes through this area, it starts coming out the bottom, you're going to be sorry you took the trade. So just wait, let it give you a little bit of a green candle before you go. It's the same as I did here with the US dollar, Canadian dollar. I could have taken the short this morning up here with this first red candle, but I was, let's just give us a bit of confirmation, let the red candle come out of here, let it push through back down to the downside, give us a little bit of indication that it wants to go down. There's a nice big red candle. I'm looking at that and thinking, maybe that's worthwhile. And that's why we're in that trade now. Risking again another $200 on the day. Shane, morning Kevin, and Shane says Brent going to 69, and that's not impossible as well. Are we on? No, we're on US dollar. Brent. Yeah, it could go to 69. I mean, look at that, 69. There's the bottoms. No, it could go through here. Look how many times it's hit into this support. It's in the support, usually around the 70 mark, And for years, when I've traded Brent, it's been between 65 and 100, 105, 120. The one time that it went to zero was during the pandemic and stuff, where it dropped to zero. I mean, that's like a black swan event, and that's not something that's going to happen on an everyday basis. In general, through the periods of the manipulation of oil, let's say, because the cartels sit together and they really work out how many barrels are getting sold and not sold and that sort of thing. And that's what moves the price around. And I think they try and keep the price around the 85, 80 level. At the moment, it's dropped to 70. 70 is pretty low for them. So if you're looking at investing in oil, you'll probably get it all the way back up to 80 again, maybe even 82, sometimes even 85. But look for 78, 79, 80. Like I say, I would wait for the green candle because it could, like Shane says, could come down to 69 quite easily. And it does that. It trades between that level and up at the moment it's trading between 70 and 80 basically. You can work with that. Hey, it's coffee with Rob, so you might as well have some coffee, eh? So yeah, as I said in the beginning, our first trade of the month went pear-shaped. Didn't go well. So we've lost $248 off the account, thanks to my insane trade yesterday. But the rest of the trades might do well. And as I showed you the statement in the beginning of the video, from last month, you can see we lost our first three last month as well. And then it picked up and went through the month okay. So yeah, it is what it is. But last month, it finished in a positive, and we'll see what this month brings. Remember, these are your trades mostly, guys. These are mostly your trades. Yesterday was me, so I'll take full responsibility for that loss. Okay, so yeah. Hey Rob, based on your experience, what are the top 3 things that price likes to gravitate towards or target? Old highs, lows, round numbers, what else? We've got to be careful of that question. You've got to be very, very careful of that question. Like I always tell you guys, round numbers are very important because the reason I say that is not because price is gravitating towards that because of any kind of maths or any kind of algorithm or anything to that effect, because you guys know how I feel about that. The stock market is not about numbers and lines and things like that. It's about people. It's about human beings. So the reason we gravitate towards round numbers is because human beings like round numbers. We see things in round numbers. So we don't see 25.978432. We see 26. We see 27. We see 30. We see 3,000. Human being psychology. It's the psychology of trading. So the psychology behind it is very much to do with your mind and how you see things. So price will gravitate towards what human beings see on a daily basis, what human beings do on a daily basis. And that speaker's coming on again. The sirens are going to go off for the nuclear plant again. If you do hear that, don't panic. I live close to a nuclear plant, as I said, and they're having their little testing thing going on today. They accidentally switched both reactors off because they were working on one and tripped the other one. So they're busy switching everything back on again. And they're now doing the test on all their sirens and whatnot. So yeah, they do this once in a while, and it sounds quite scary. So people that are on holiday here at the beach must be thinking, what the hell? Because I get fair warning up front that they're going to be testing. And it's very difficult to hear what they're saying on the speakers sometimes when they're saying, this is just a test. And then if you don't hear that, you'll be thinking, oh my goodness, the world's ending, because we do live close to a nuclear. I live 16 kilometers away from it, so I believe I'm pretty safe. But the guys who live right next to it, that's tricky if something goes wrong. Okay, so yeah, price. You see, what you've got to watch out for. So if you want to look at it from a technical perspective there, what you've got to do is think for yourself. The best way to do it is the way I always show you guys. Price gravitates towards resistance. Price gravitates towards support. You draw your main support on. Just look at what happened in the past. because human beings are creatures of habit. Human beings do what they did last week, or yesterday, or the day before last year. Human beings do the same things over and over and over again, and that's why you have these resistance and why you have these support levels. So price will gravitate towards those resistance levels, towards those support levels, whether it be on a trend resistance and support, or whether it be on a normal resistance and support. That's why we draw them in. So look for price gravitating towards that. That's what you're looking for. And then, of course, you know, like you said, the round numbers are important because human beings like round numbers. Hey, Lincoln, welcome. Good to have you on board. Good to see you again. And, okay, here we go. The connection's messing around a little bit again, but that's okay. Hopefully it's got nothing to do with a nuclear plant having its little wobble today. So yeah, I've been looking short the DAX. Short the DAX. You can short the DAX, but just keep in mind that it hasn't broken structure properly yet, and maybe on the short term, but it's a tricky one to short at the moment, because while the markets are weak, while the markets are showing you this weakness, they're not insanely weak. They're not like end of the world sort of weak. I think if you want to short something, maybe look at the UK 100, the FTSE. You know, I'd be more comfortable shorting the FTSE because that does tend to stay in its ranges. The DAX is a strong market, man. So yeah, you could go short on it now, short term, very short term, but it's probably going to turn around and head on to the upside again because it is in a bullish phase. And folks, yeah, smash the like button, guys, as Lincoln says. Don't forget, that'll help. That's good for the show. It's good for us, good for everyone. So Lincoln, we took a trade on US dollar, Canadian dollar just now, and I was just showing everybody the first trade we took yesterday. We lost $250 on it. Australian dollar, Canadian dollar. That was my mess up. Total mess. We could short the DAX, but it's you might as well be shorting the US 500. Same thing, you know. You might as well be shorting here. And I'm actually rather waiting for the long trade to come off here. I'm not convinced that the markets are crashing. I'm really not. I'm convinced we're going to get a correction, but I'm not convinced of anything seriously going wrong. I still think we're going to finish the year on the S&P at around 6,600 or 7,000. Oh, there goes the sirens again. Don't know if you guys can hear them in the background. I got a pretty good mic for cutting that sort of thing out, but yeah, that's my nuclear power plant sirens that they're testing. Can you believe it? I think if you live 16 k's away, it should be okay. It's not too bad. At least I hope so. Okay. My analysis of the S&P 500. I'm also still shorting Brent oil. Like I said with Brent. Oh, this siren must shut up now. Like I said with Brent, it has kind of hit the lower level. So risk to reward, I don't know, because I'm looking at it as it might reach 69, it might get to 69, but 70 is kind of my area for that. And if it breaks through here, great, then it's going to the floor. But I doubt it. The cartels will step in and they'll do their normal, and I think it'll bounce up here all the way back up to 80 again pretty soon. Great British Pound, New Zealand dollar. Let's have a look at that. Great British Pound, New Zealand dollar. Where are you? Got to be here somewhere. I guess I'm going to have to type it in, aren't I? Great British Pound, New Zealand dollar. Probably because it's not on my watch. Okay, let's put it on and see what we got. And did you say short? Okay, you're looking at it. You haven't taken it yet, most likely. Euro, Canadian dollar. I've taken the US dollar, Canadian dollar short for us, Shane. So I'm not going to short the Euro, Canadian dollar as well. Let's just have a look at this Great British Pound, New Zealand dollar. see what we got here. First, we'll take it up, and we'll just put it on a line chart. Let's just have a look at what we got here. Let's just see what we got, shall we? Let me make these lines yellow so you guys can see them. You can't see them if I leave them in the faded state that I have them here. I keep them in a very sort of faded state so they don't get in my way. Yeah, that. Let's make it a bit yellow here. Boom, 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 boom. Okay, you want to short that. Very much a trend, this one, rather than a support and resistance, but we can put a support and resistance in here, a support level. There is a support level there. Let's see. There's a bit of a support level there. I think that one is a bit tough. Let's just make it a bit shorter. Okay, let's just see what we've got here, shall we? There's your 4 hour. There's your candles. What you've got here, if you're going short on the Great British Pound, New Zealand dollar, a really strong bullish run. So you're going against the trend. The problem with going against this trend is this. You need for this to sort of turn around over there and break through this level here. Okay, I get it, but look at this. It's actually broken through that trend resistance, and it's looking like it wants to go to the upside. I'm thinking this has got more run to the upside than it has to the downside. I know you're thinking supermarket like it's expensive, it's overbought, the RSI is probably high if you want to bring it up here, but I'd be careful on shorting this just yet. Just wait with that. Euro, Canadian dollar, pretty much the same as the US dollar, Canadian dollar, and you've taken the short on that. You may also have taken it a bit earlier, but it's probably going to come down to here and fetch this money anyway, so it's probably okay. It's a bit like when I wanted to take this trade, I would have taken it a bit earlier, but I was a bit concerned about taking it too early. I was waiting for a confirmation. Now on the Euro CAD, you haven't waited for the confirmation, you've grabbed it. It hasn't confirmed a change of structure yet. It is still bullish. So I hope it works out, but I'd have waited a little bit before taking this Euro CAD short. It might be a little bit early. It would be great if it crashed. It would be we could buy in cheap afterwards. Supposing we all have money left, the Brent will be great once it bottoms. Yeah, the Brent is bottoming at the moment, so that's a good buy. The other good buy, Lincoln, is what we're looking at, Bitcoin. Bitcoin is bottoming. It's also coming down. US 500. Look, US 500 is pretty much going to bottom soon. I don't think it'll get much past this level here. So it could. I've seen it do that to me before, where I thought, okay, that's the end, and then it goes another 1,000 points. That's quite insane. But yeah, I think it'll be okay. I think it'll get down to these levels and probably bounce back up. So that'll be a good buy. So I think we're going to get some nice buys into the level. I'm really looking at the US 500 buys in these levels because I think we're going to make 1,000 points on it. Then there's a couple of other ones I was looking at. Like I said, Bitcoin, gold. I've kind of given up on it now because my risk to reward wasn't good. I was going to buy this morning and then I thought, too late. Risk to reward's not there. Then there's the Brent crude, like you say, Brent, if you can get in at these levels, looking good for a buy. Just not yet. You just need a bit of confirmation. Let the sell finish off or polish off its day. Okay. Oh yes, your S&P 500. As I've been talking about it, you asked about it now. You know, it's pretty much. Can I make this more clear? You see, it's been in this range for a while now. It reached a level, and it just couldn't get through it. So it's been doing this funny pattern, coming down, coming down, coming down, coming down. And then it broke to the downside. It actually broke its trend support and broke to the downside. Now, the thing to understand about the S&P 500, I've traded it most of my life. And I've always loved trading it, and it's always been something worthwhile trading, but it's got its own life, its own life force. And what it'll do to you, it'll make you think, well, that's the level, that's the point, that's where I need to turn it, and it'll do another 1,000 points, you know what I mean? So you've got to watch the S&P 500. You've got to watch yourself with that. Take trades that you see, take what you see, take it clearly, watch it clearly, because it will, if you catch a falling knife on the S&P 500, it will cut you, it will hurt you. So what I wait for on the S&P 500, I prefer to wait for a buy, is my opinion of it this year, in general, is it's going to go up. I think it's going to carry on going up like it always has, like it always does. I must say, I do not like shorting the S&P 500. It makes me nervous. I prefer being long on the S&P 500 most of the time. So especially when the markets are bullish. So in general, the markets are still a bullish market. Now we can go up to the weekly charts, look at that long upside. Now it's broken that upside, and we've got some downside. Now, it could, you're thinking 5,700, there's a good buy, and then it could drop down here to the 5,200, because there's a long way down to that as well. And imagine if it starts really tanking. So, yeah, you got to just wait for your opportunity, and then we can get our buying shoes on again. Like I say, I was waiting for this 57 level. I'll be happy with that 57 level, but there's another level down here at 54. We just got to watch it and take it as we see it. At the moment, it's selling. It's a sell. It's not a buy just yet. You can't buy it now. It's too early. But that said, you wake up this afternoon and off it goes again. And I'm a bit tired of missing the S&P 500, to be honest. And then FOMO sets in, and FOMO is your worst enemy, fear of missing out. And you think, I've just got to buy this now, and then it really does its correction, because that's another thing the S&P 500 does to you. It keeps on teasing you, teasing you, teasing you, teasing you, teasing you, and you think, this thing's just going to leave me behind now. You jump in, and then it corrects. So that's something I've learned with the S&P 500 as well. Okay, in your experience, is drawdown control with position sizing effective? Reducing position sizing, amount of drawdown, increasing position sizing when the amount of profit. A position sizing hook when you're in profit is great. If you want to increase your trade, and you can, that's great. What I do normally recommend is when you're in a profit, learn to first follow your win. If you're new to trading, get used to following your wins, which is why I haven't been promoting adding to the trading lately on this particular scenario, because it is a difficult thing to do. But yes, if you can increase your position size when you're in a profit, then you can. But first learn to follow your trade psychologically. Get used to that first, but get comfortable with that, and then you can start adding to your winning trades. Losing trades, never add to them, but if you feel the need to subtract from it, then your trade's becoming invalid. So I don't downsize a trade. What I'll do, I'll have my stop loss in place, and I remember we have a strategy, and that strategy is to keep the stop loss the same on every single trade. If you start downsizing it, then you're changing the strategy. But, the smaller the loss you take, the better. So if you've targeted, we're going to take a $200 or $250 stop loss, and you can get out at $100, then do so. If you can get out earlier and you think this trade's invalid, then do so. Take smaller losses. Take the smallest losses you possibly can. If you feel uncomfortable with a trade, dump it, walk away, take the next trade. Learn to lose. Right? And if it takes out your full stop amount, let it take it out. That's okay. But don't play around with sizing in a loss. But in a win, you can play around with sizing, you can add. But don't decrease your trade size if you're in a win. If you're in a win, increase the trade size. Don't decrease it. Increase the trade size in the wins. But first learn to follow your trade to its target. First learn to take the trade up. So yes, I am a fan of position sizing, but position sizing to the upside. I'm totally against position sizing to the downside. Dollar cost averaging will destroy you. It will bankrupt you. It will take all your money. Always. It always ends in tears. Somewhere down the line, somewhere in the future. Dollar cost averaging does not work. And you'll say to me, but, and okay, let me explain something to you. If you're going to dollar cost average when you're in a red to the upside, okay, so you want to make the trade a little bit better so you can get your money back. When you take the trade, you can't take a full trade. So let's say you were going to take a $1,000 trade or a 1,000 contract trade. If you're going to dollar cost average it and you know up front, then you're going to have to take 10% of that, which is like 100 instead of 1,000. And then if it goes into a win, you're only going to win based on that 100, not based on the 1,000. Just do the maths. You're not going to make any money that way. And then if it goes into a loss, you're going to dollar cost average to make the trade bigger. And then it comes back up to the break even, and then you're going to get out of it because you're going to see green for the first time in 3 days. And psychologically, you're going to be like, oh, I got my money back. It's called a relief trade. That relief trade is what you're going to get. And you're going to jump out of the trade at a relief trade, run away with the money. You're not going to make any profit out of it. That's why dollar cost averaging always ends in tears. It never wins. It's the same as scalping. If you're scalping, or if you're taking small amounts, so if you're trading on smaller amounts and you wanna win on 10 pips, you want to win on 5 pips, you want to win on 15 or whatever, and you're taking those quick profits. If you have a strategy for stop loss, a solid strategy for stop loss, and you're doing that, it can be okay, because then you're taking 10 of every win and you're losing 5 of every loss, which is solid. Okay. The trouble with that is, on those lower time frames, is the movement of say 5 points, 5 contracts, 5 lots, 5 pips is very quick. Look at this. Look how much this has moved this in the last few minutes. If it goes the wrong way, it's going to go the wrong way against you very quickly, a number of times, based on very weak information coming from that candle or that time frame or whatever the case. So it is very difficult to hold a strategy when you're scalping. So what most scalpers do is they trade based on, I'm going to take a profit quickly every single time I trade. They base it on a win rate. They base the fact that they're going to win every single trade. And you and I both know you ain't going to win every single trade. There ain't no chance you're going to win every single trade, not if you're doing it properly. So they're basing their whole theory on they're going to have a 100% win rate. So they win. 8 times, 9 times they win because it's small profits. I mean, every time it goes profit small, like this now, I would close this and take my $24, move on to the next one. Okay. And then I'll have 10 of those and I'll have $250 profit. And I think that's great. Okay. And then the 11th one comes along, goes into loss. Now what? Now I wait, because I'm waiting for it to go into profit, because I need a 100% win rate, right? But it keeps on going into loss. It keeps on getting worse and worse and worse. $500, $600, $700. So all that money that you won is wiped off the table. It's demoralizing. It's insane. So yes, that doesn't work. Doesn't work. Never has. Never will. Okay. Right. Don't like trading against tight channels like this. Against. You think could come back right from where it is. Okay, I think you're talking about the US 500. US 500, Tarkov newbie says US 500. You see, that's the problem with the S&P 500. It's in the middle here. It's not telling you anything. There's big red candles. Those big red candles, you know what they're telling me? There's a lot of sellers in the market. Don't look at the candles. Think about who's behind those candles. What are those candles made by? They're made by a lot of selling. That's a lot of money being sold out of the market. So that tells me there's pressure to the downside. And the only thing that's going to turn that around is some really good news today. So yeah, be careful of this. There's a lot of selling pressure. And there's been a lot of selling pressure all the way down. There goes the damn sirens again. I can hardly hear myself. Yeah. Hopefully these are all tests, like they say. But anyway, yeah, that's what a nuclear power plant siren sounds like, in case you don't know, if you can hear it. And hey, Rob, are you from the UK? Wow, it's getting louder. Insane, crazy. So the question here is, hey, Rob, are you from the UK? I was born in Scotland, yes, but I only stayed there for a few years, and I've lived most of my life in Africa, about 55 years of it. I've been here a long time. So I'm mostly South African, mostly African, mostly, yeah, from this side. Okay, so I get FOMO sometimes, but I always tell myself to get over it. A normal human cannot be on top of everything in the market. It's not possible. Everybody, I mean, I don't care who they are, everybody gets FOMO. And that is, fear and FOMO is your worst enemy. It's the one thing that's going to work against you constantly in the markets, besides patience. Patience is a big one as well, having patience. Well, patience sort of almost goes hand in hand with FOMO. You know, you're not patient enough, you jump in, you try and rush the trades, and you just feel like you're going to get left behind. And yeah, you know, one thing I'm seeing a lot of, particularly on YouTube, I'm looking around at what other people are doing, because obviously I would like to improve the channel for you guys as much as possible. So I had a look at one or two other guys out there and what they're doing and stuff quickly, and just to see what's their thing. Okay. And one thing I'm seeing is I'm only seeing winners. I'm only seeing people win. I'm only seeing people showing winners, and that concerns me, because that's not right. That is impossible. So yeah, I've been looking around a bit to see what, and I thought, well, if that's the only thing that's going to make the channel successful, we're never going to get really big. But but that seems to be what people attach themselves to. That people attach themselves to people saying, look at the size of my account. I made R1 million in 3 pips, and I did this and I did that, and look at me, I'm a hero. And that seems to be what people are attracted to at the moment. Guys, be careful of that. Do be careful. I don't talk bad about any other traders. I believe they're all fantastic, and you can learn something from absolutely everyone. I believe everyone's got something to teach you. But it's just that I noticed that. And yeah, don't fall for that, guys. Don't fall for that. That's not possible. I don't know any human being. I actually don't know any trader that's got that kind of win rate. Really, I don't. In real life, I know a lot of friends that are traders, and they got different methods and different ways of trading. We all do. And I got to tell you that all of them will be pretty straightforward with me and agree with me that the market's 50-50. Their win rate is either 50% or less. Most of them, I don't think any of them have even got a 60% win rate. So for these guys to be telling you there's a 70% possibility of wins and 100% wins, and you know, their strategies and whatnot, they might be showing you some wins, but they're not showing you the losses and the profits and losses and that sort of thing. So yeah, I just thought I'd bring that up. But like I say, I don't talk bad about anyone. As far as I'm concerned, everybody's offering something. I just worry about that. I just noticed that I was watching and thinking, sure, really, you know, that's quite insane. Okay, Shane, do not confuse investing with trading. You say, hi, Rob, I've heard that when investing in stock, you invest on a stock, say monthly and dollar cost average. So you're confused. Sorry to confuse you, Shane. I really did not mean to confuse you guys, okay? Just bear with me here. Trading on I call it geared account, and somebody said to me last week, that's the first time they heard the term, so leveraged account, so that's more your terminology. Trading on a leveraged account is completely different to investing. So when you're trading on a leveraged account and you dollar cost averaging, you are looking for trouble, because you are trading. You are not investing, you are trading, and you're looking for that profit, and it's going to wipe out your account. When you're investing, This is a completely different ballgame. Now, my investments are the thing that actually carry me through my life, because investments are time in the market, not timing the market. Trading is trying to time the market. Two totally different things here. Investing, you dollar cost average. I do it all the time. What I do, I have my investment account. Every month I go and I have a look at what I'm buying, what am I adding to, and whether it's in profit or whether it's in loss, doesn't matter to me. I will add to the investment, and I'll add to the investment on a basis of I'm just adding to the investment. I'm not trying to dollar cost average it. I'm just adding to it so that it grows. And I'm sort of balancing it out amongst the other investments. And I'm still happy with that investment. I'm not seeing it crash to the ground and just get destroyed or whatever. So Nvidia is maybe a good example. Nvidia's had a bit of a correction, and everybody's panicking and everybody's going insane. But there's nothing wrong with Nvidia as a company at the moment. So you can look at it and say, maybe it's a good time to add to my investment. Maybe it's a good time to buy in because it's got a little bit cheaper. It's had a bit of a correction. Anheuser-Busch was another good example of that last month. I added to that myself because I think it was last month. But I looked at it and it had come back because they said, oh no, all alcohol suppliers have now got to put a label on their bottles or whatever the case. But like the cigarettes, man, the prices went crashing down. That was my opportunity to get in and buy. I was like, well, I'm buying. There I go. I'm adding to my initial investments. But when you've been invested for as many years as I have, it doesn't really matter because you're kind of like, okay, I'm just adding to my investments. But if you just sort of invested now, it might be a bit sort of like, ooh, my investment's going down. But remember, on investments, your investment's 1-to-1. You put $1 in, you get $1 back. It's 1-to-1. It's not leveraged. It's not trading. I'm buying it for the next 30 years and I'm good with that. That's my investment. I'm leaving it there and I'm forgetting about it. So don't confuse that with trading. That's time in the market. You're leaving that for as long as you possibly can. And if you see a bit of a correction in that market, that's a good time to buy if you're happy with the company. So keep that separate. The investing psychology is different to the trading psychology. Now, you're looking for a profit in the future, but it's a much shorter future. You're looking for it now. And also you've leveraged your money. If this goes down 10%, it takes your whole account. That's a different ballgame, Shane. That's a different ballgame. You must think about it, okay? So now you want to be losing maybe 1 or 2%. You don't want to be losing 10% because 10% could be the whole ballgame. So if you take $10,000 and you risk it for $100,000 trade. So that's not even 500 to 1, that's 100 to 1, right? So now you risk it for $100,000 trade. If that $100,000 goes down 10%, it takes $10,000, it takes your whole account. That's leverage trading. So with that, you don't want to be dollar cost averaging. You don't want to be messing around with stop loss. You want to be sitting with a situation where you have a risk management in place to protect your account. Remember with investing, I'm like the pros. I don't have a stop loss. I don't have a take profit. My investments are forever investments. I just put the money there. It's like putting the money in the bank and forgetting about it. I put the money in there and I don't take it out. I don't sell. I never sell. The only time I'll sell an investment is when I've heard the word fraud or something bad's happening or they're being investigated or something like that. Then I'll sell that share, take that money and buy another one. That's the only time I'll sell something that I've bought for an investment. So it stays there. It stays there forever and there's no stop loss there at all, ever. No stop loss. That's investments. Trading, different ballgame. That's what I'm showing you guys here. Trading is risk management. Trading is stop loss. Trading is putting the same risk on every trade. Okay. So, yeah, Shane. I wonder why they put the ads on live streams. I don't know how it works. I don't know how the thing on the other side works or how they do it. Because whether you switch it on and off, they put the ads anyway. So it's like They've actually changed something. They mentioned to other creators, they gave us news that they're changing the way they're putting their ads out as well, and the way the mid-roll goes out and all that. And I know it's irritating, guys, but just bear with it, at the end of the day. The only way to get around the ads is to have one of these fancy premium accounts or whatever. I don't know. Yeah. Nobody likes clickbait, but yet it works. Yes, it does work well, Lincoln. The clickbait works, but it's difficult because you're in amongst you're in a pool. You're in a pool of other people that do things, and then you get put in the same category, and you work in that category, and it's what people like. So I'm actually supposed to put stuff out that people like, that people enjoy, that people want to watch. And but if I do that, then I'm going against my own policies. So I don't want to do that. So I'll put out what I think is best, and I'll try and put out what people like, but within reason. And we'll see how that goes. We'll see how it goes, and we'll see how it works out at the end of the day. That's the best I can do, Yeah, I'm enjoying the YouTube journey though. I'm loving it to bits. It's great fun. It's quite addictive, just like trading, and that's why I'm here. It's a lot of fun. Okay. And hey Rob, how was your trading during Black Swan events? Like, I'm not going to mention the name because I don't know how YouTube likes that. And the recession of 2008. 2008 was in all likelihood the worst one because 2008 happened incredibly fast. Lehman Brothers was collapsing, and it was. You're in this market, you're looking at it, and it's all going well. Try and picture the scene. You're there, and everything's doing great, and suddenly there's this shakiness of a bank, right? And this is why I always warn you guys about the weekends. This is Friday afternoon. Friday afternoon, things start going pear-shaped. You get a couple of big red lines going down, and you're not quite 100% sure what's going down. Luckily, I'd been in the markets for a long time already and saw the 90s crashes and whatnot. So I looked at the market, I saw the weakness, and I thought, okay, let me do what we do here and just back off and get out. Move back, take a step back. That said, I didn't sell my investments because my investments are my investments. So that stayed. So that's quite painful to watch that drop down, but it'll come back. It always does. But the gear trading, there I jumped out complete. A few of my friends didn't. Let me tell you something, they didn't. And over the weekend, it all hit the wall, okay? It all went pear-shaped. Monday morning, huge gaps, huge downside, and bankruptcies, people calling to get their money, brokers calling their clients, margin calls. Tell you what, the margin calls. I had friends call me and ask for help. It's no, it was a horrifying time. Luckily for me, I managed it and I saw it coming, and once again, avoided it, skipped it. When I saw the 2000s disease thing coming, I also was very cautious. I see what's happening in the markets, and I proceed with caution. Like this weekend, for example, it wasn't that big a problem, but I still proceeded with caution with all the Trump meetings and what have you. So, I went into the Friday thinking, let me put a close trailing stop loss on the gold and let it take it, because I don't really want to be sitting in it over the weekend if I can help it. Nothing happened, but what if it did? So I am very cautious. Wars are another thing, not just those crashes. Look out for wars when they come. Those are bad. Those can be quite detrimental to the markets. But yeah, 2008 was one of the worst. That was such a bad one. I'll remember it clearly. Oof, biggie. Mainly because I saw a few mates take a big hit, and it's not good. Those types of things can hurt. Those types of things can hurt you. really badly. And if you've got leverage trading, well, because you don't see it. It's a funny thing. You actually don't see it. You see it, but you don't see it. You see the markets turning, you see it going over. It's a bit like this. You're seeing this market go over, right? There's a bit of noise in the background, but you're seeing it go over. It's not a big deal. It's going over. You're quite convinced it'll get to there and it'll go up. You're not really seeing it. And if there's really bad news and you're seeing this, you're still convinced that everything will sort itself out. But then it doesn't. And you wake up on Monday morning and the world is turned against you. So yeah, black swan events can be insanely difficult. And no, markets are not easy to read during these periods because, as I say, you don't see it. You see this, but you're not really putting two and two together. That's why I talk about the psychology of trading. Getting your psychology right is so important. Your brain doesn't connect the dots. It for some other reason won't connect the dots. Your brain keeps telling you, don't worry, it'll be fine. It'll come back like it always does. And you don't connect the dots. And then Monday morning is just these huge red lines. So yeah, I was fortunate at those times, most of those times, where I understood the markets a little bit better. I still refused to sell my investments. I still kept those, but fortunately for me, they went down at that time and went back up again. And I added to a lot of them, dollar cost averaging, as you say, because, I remember, for example, Old Mutual was one of my trades, one of my shares, investments. And when 2008 hit, I think it was around 14 or 15 Rand, it was a South African share, and I bought most of them over that period for around 4 Rand and 5 Rand to increase the value of that. It's insane. There's a couple of others as well, which I bought at insanely low prices, and they just grew to immense size. So yeah, you can get a lot out of that as well. If you savvy with investments, you can get a lot out of that as well if you've got money to invest. Trading, yeah, you can't trade at that time. By the way, when that's happening, you cannot trade unless you're just short on everything. You cannot trade. It's impossible to read the markets. Omelos asked, do you ever trade stocks? I used to trade stocks all the time. It was actually all I ever did. I actually started my career trading stocks. Stocks were my thing to trade. The only reason I don't do it now is because there's just no point. How can I put it? I just invest in stocks now. And because all these indexes and Forex and commodities and that are there, I don't need to trade in this or trade stocks anymore. But yeah, it's a good place to learn. It's a good place to pick up a lot of experience. Stocks are a fantastic place to pick up experience. And sirens coming again. Geez, can't they get it right? It's just a practice run, this nuclear plant. And Eugene, euro US dollar for long. I was looking at it earlier. A buy. I think I've missed it. It's really traveled. It's gone. I was actually looking at it earlier and I actually forgot about it. It was a good buy. Okay, it's hit some tops here. Okay, so just be careful of these tops, Eugene. You see here, there's a lot of tops there. Shall I make it yellow so you can see it? Oh, there you go. There's a big top here. So just watch out for that. Doesn't seem to want to get through it. Maybe if it breaks through that, you can get a good long. See, there's a top there, a top there, a top there, a top there. It's like a quadruple top. So yeah, watch out. Okay. Yeah, okay. Shane, yeah, clarifying the DCA with stocks and investing is two totally different things. And yeah, you know what, Shane? Even I refuse to pay for a premium account. I probably shouldn't say that. So yeah, I actually watch a lot of YouTube on TV, but I like watching other things like travel programs and things like that. And then I get all these ads constantly coming up, skip, skip, skip. But it's getting difficult. They're not skipping anymore. Eh? They don't skip them so easy anymore. Here's Fib as a guide when trading. Fib is a very good one. I like Shane. I like Fib. Fib's a very good one. I just don't want to confuse everyone with Fib, but I don't use it on a daily basis. But it's nice to use. It's nice to pick up on. Best time to increase your portfolio, whether it be stocks or real estate. Everything on discount. Best time to deploy cash reserves. Yes, totally. Using Fib extension on Euro US dollar is at 0.5. Which trading platform are you using? Pomlos. This is C-Trader. This is from Funded Trader Markets. This is the account I opened for us together, guys, so that you guys can choose trades. So we can trade when we see something worthwhile trading, we'll trade it. And but this is offered by them. It's C-Trader. But all the platforms are the same at the end of the day. You know that there's not much difference between them. It really doesn't matter. Okay, so we can't really go long on Euro US dollar just yet because there's a quadruple top on that. We can't go long on gold because there's no risk to reward. The risk to reward is not there. So that's not going to be a great trade. We do have the US dollar, Canadian dollar. Anything else, guys? Anything else that we should be trading that you think would be great? Just go back to the Euro US dollar and just have a look at what you're doing with the Fib. That's the Fibonacci on the Euro US dollar. Yeah. It's actually got quite a long way to come down. If I look at it. Just by the way. Okay. With a Fib, guys, always try and take it on the last low here. Don't be putting too many too far back. Okay. It's played out already. Even this is probably played out already, but that's too short term. I'm just giving it a bit of a longer run. Okay. Fib extension. Okay. Yeah, you know, if you're shorting Euro US dollar, then yeah. See if this one works. I don't use it very often. This one doesn't give you that extension. Okay. Normally you can see it up there, but yeah, okay. Shorting is not a bad idea here. You might go short here, get it back down to 1035. It's actually not the worst thing, but yeah, on my side, the way I look at things, we do have support and resistance in here. What's going on? Just don't crash on me now. Goodness me, that will be just brilliant. Looks like my I had a brain seizure there for a moment. Don't know why. Okay, there we go. There's your short coming up. Look at that. There's your short coming up. Looks like you're getting your short off of these levels. The only thing is, like, on this side, we'd be looking at, would we get it to go through there? And get the short coming out of there. See if it goes that direction, eh? No, your thoughts. Would be great if you could send screenshots. I think you can. Look, there's a plus sign there. I don't know if you can. I can. But looks like a fair short. something I would look at. 105033. See, I would 10502. I'd probably only take the short from 10502 because it's going to break through there. This is a very short-term sort of trade if you're looking at it from this perspective. I'd be looking for a profit down 102, 1042 with a view to it coming, breaking to the downside. But it looks like it's breaking off this top. But you see how every trader thinks differently. There was somebody up here earlier Eugene looking at Euro US dollar for a possible long trade. Shane looking at Euro US dollar for a short trade. So that's interesting. That's very interesting how no two traders see eye to eye when it comes to taking a trade. That's why it's 50-50. And that's why you need Shane and you need Eugene in the market, because one's buying and one's selling. That's I rest my case. And it's just the way you see the market. It's just the way you see things. And it's just the way you trade, the way you look at it at the end of the day. Yeah. Interesting, that. Yeah, your focus determines your reality. That's true. That's totally true. That's why I say everyone's got their own idea of which way something might go or might work out. That's why there is a market. You know, so many guys argue with me that the market's fractal and it's maths, and Eugene says I'm not in the trade right now. It's insanely how it is. But no, it's just a point of view, Eugene. Like, everybody's got a point of view on how they would take a trade. And that's why the market's 50-50. That's what I'm trying to point out to everyone on a daily basis. I've had people argue with me till they're blue in the face that the market's all mathematical and it's all fractal and it's all about maths and algos and stuff. And I'll argue till I'm blue in the face that the market's about human beings. Because if the market was just a big computer, the market would end on zero. Because every part of the market would be right. And that's just not how it works. For someone to make money, someone's got to be wrong. And the only way that can happen is if you have human beings in the market. You have willing buyer, willing seller. That's how it works, guys. And someone wants to buy, someone wants to sell. That's why you can't win every single trade. That's what I say. Look at it. I look at the markets and I look at what's going on, and I see all these guys boasting that they're winning every single trade. And I'm like, oh, guys, I don't know how you're doing that, but that's fantastic. I wish I could do that. I wish I could win every single trade. If I could, well, I'd just live it up on ships all the time, sailing around the world, because every trade I take would just be a win and I'd just make millions on every trade. Okay, in profit, current shorting Euro CAD. Yeah, it's pretty similar to the US dollar CAD, I believe. The Euro CAD. We were looking earlier at the Euro CAD. Where are you? There you go, Euro CAD. That is going nicely. There you go. It's actually become quite a nice trade. We're all commissions and spread for the big boys, aren't we just, eh? Aren't we just? Yeah, totally. Retail traders, commissions and spread for the big boys. Trading's very difficult. It sure is. And while nobody wants to hear that, I guess that's what I keep telling people. Trading is very difficult. Okay, so you're in profit on the Euro CAD, and the other one was the Euro US dollar. Eh? So you took the short there. Yes, there you go. There's the nice profit coming for you. That's working out quite well. So yeah, Shane, you're doing good there. Doing good. That's excellent. Okay, so Shane, you're a short-term trader, high risk. But as long as you have the strategy, you know, if you're going to trade short-term, put the strategy in place. And if you're able to put the strategy in place and trade short-term, that is all you need. That's fantastic. Let me point out to you, let me find something that doesn't have a whole lot of stuff on it. And then I can show you what we did as youngsters back in our day. And then you can get an idea of how simple trading is. I just need a proper, yeah, this chart might work. The US dollar CHF might work. I just need to take this out of the way. I'm going to take that out of the way. So if we had a chart like this, when we started out, now remember this wasn't on a computer. This was on a piece of paper. Effectively, it was on a piece of paper. It's not going to give you a really good thing, but it'll give you some idea. We'll take a line, draw it through here, right? That would be on a piece of paper. That was your line. And effectively, every time the price broke to the upside, you would buy. And every time the price broke to the downside, you would sell below that line. In other words, what we did was we drew a line in the sand. That's all we did. We drew a line in the sand. It said, the price is below that, we're selling. If the price goes above that, we're buying. And if it comes back and goes below that again, we're selling. That and vice versa. That was it. And it was normally to the upside. So we should actually be looking for something that's moving to the upside here. Give you a better idea. That it was so simple back in the day. There was nothing complicated about it. You know, there's your line in the sand, something like that. You know, you're sort of like, when it's above that, you're buying, and when it comes back through that, you sell. And then wait for it to go back up, and then it goes through and you buy, and you wait for it to come back and you sell. That was it. We drew a line in the sand, and that was it. These days, everything's so complicated, it's insane. Unbelievable. So that's why I keep it simple with resistance, support, trend resistance, trend support. Bit of supply and demand, and then that's all you need. Boom. How's this trade gonna do? Well, it's in profit, so I guess that's okay. Australian dollar, Canadian dollar. Man, that took us out yesterday on the short, and look at it today. Now it's going the way we want it to. Isn't that just normal, eh? Okay. Bitcoin. What's happening with crypto, guys? A couple of guys have asked me about crypto. So let's just go and have a look at crypto, shall we? Crypto. What's on the crypto? Let's have a look at ETH. That seems to be on a double bottom, support. I wouldn't go short on that. Definitely look at a long on that. The LTC, same as the ETH. XRP. Pretty similar to Bitcoin, actually. Yeah, most of them looks like they want to go long. Bitcoin, I think it's hitting the double bottom down here. Round about the 70, let's have a look. Around about the 78,000 level. I'm hoping it'll get all the way down to 70,000, 67,000. It'll make for a nice buy. Okay. Okay. Well, that's the Bitcoin. CHF, JPY, what do I think? If I remember correctly, I was thinking buy. Let me just have another look at it. before I make any decisions for us. Let's bring that in a bit closer. Let's bring that down a bit. Let's just have a look here. What have we got? Day chart, back to the 4-hour chart. I would actually like to buy it, but I'd like to buy it if it gets above that level there, above this 167.5, and that will give us a bit of a buy. So if we were to put an alert in around there, that would say, okay, we can buy that, because you can see here, every time it gets to that level, it wants to come back. It needs to sort of break this trend resistance and give us a buy signal. That'll give us a nice buy signal to the upside and it'll change direction. Because if it stays below this, it's going to carry on going down. Okay. While similar to the MA, the moving average crossover system is actually excellent. I don't know if you guys have used it, where you take an 8 or a 9-day moving average and you cross it over the 20-day moving average. And every time it crosses, you buy and sell. It's the same as your 50 and 200-day moving average, where if it crosses above, the 50-day crosses over the 200 above, it's a golden cross, you buy. And if it's coming down below the 200, it's the death cross and you sell. Now, it's a similar system to that. Are you doing it on an 8-day and a 20-day moving average? I found the 8-day work better than the 9-day. Some people use a 9 or a 10-day. I just used the 8-day over the 20-day, and it worked pretty well. Just remember, it's a lagging indicator. So the reason I don't use it is because what actually ends up happening is you end up only getting that little bit in the middle. So by the time you're taking the trade, it's all the way down here or all the way up here, sort of thing. So you miss out quite a lot of the trade. But it works. It's not a system that doesn't work. The moving average crossover, it's a lot like the MACD. The MACD actually works in a very similar way to the moving average crossover. And so yeah, Shane, MA, yeah, pretty much. It's drawing a line in the sand and just, it's above that you buy, it's below that you sell. But you can use that as well. It makes things quite easy, makes things quite sort of straightforward for a trade. Barkov says, if I were to guess, I would sell Bitcoin. Last thing you want to guess on is Bitcoin, but yeah, okay, go for it. It's 50-50. I'm waiting for it to get down to the 70s, and then I want to buy it, because I think it'll go back up again. It's the same as the US 500. I'm kind of waiting for it to get down to this 57 level, maybe a bit lower, and I'm looking to buy it. So I want to buy into it with a view to it really going up long term. I think it's going to go up nicely. What happens if you take a short trade and a long trade on the same instrument by accident? I'm aware you're not supposed to do that. So it depends if you have a hedging account or not. The hedging account, what's going to happen is you're going to end up with 2 trades and it's just going to give you a 0. Basically, you're hedging your own trade. I don't know. It depends on the funded account, if you're on a funded account. On a cash account, you're allowed to do that. I've done it many a time. What I would do, and I know it's like not something, I don't want to confuse you with this, it's not something you're supposed to do. But when a news event happened, okay, I used to have a little thing where I would zero the trade with a long or a short trade, and whichever way it went, I'd sell the opposing trade. And that was a news event trading thing. There was a time when I hung my hat on the news, and that's what I did. That was hedging. But sometimes you don't have a hedging account, so it'll just close your trade. But if you've got a hedging account, it's going to add another trade in, and you're going to end up with 2 trades, 1 sell, 1 buy, and it's just going to, you're just going to get 0 profit because it's just going to move up and down. I don't know, some funded accounts don't allow you to do that, and they'll close your account. So just dump one of the trades. Uh, the exercise of taking imaginary trades and check if it was a win-loss, do it all the time. I've heard let price come to you before entering a trade. Bracketing news events. Yes, Shane, let the price come to you. Be patient. Don't chase the price. Let the price come to you. Price will come to you. If it doesn't, then it wasn't a trade. Yeah, that's what we don't understand. If the price doesn't come to you, then it wasn't a trade. Don't force trades. Which is why a lot of you guys will trade on the lower time frames. It's because you're impatient. Impatience is your enemy. If you keep on chasing the trades and going lower and lower the time frames, it could hurt you in the end because you get impatient. You have to be patient, and patient is such a difficult thing to do. If you just look at the trades last month, we didn't have many trades, 10, maybe 15, I don't know. And you got to let the trades come to you, and sometimes you've got to sit in the trades for a couple of days and let them play out before they play out. So, yeah, don't let the trades panic you. Okay, so now US Canadian dollar is going to test my patience. See that? It's going to test my patience now. Because now it's come out of the resistance down and said to me, hey, let's go short. And now it's going to go green and it's going to test my patience. It's going to sit around here for the next 3 days before it does anything. And now I've just nailed myself by assuming that's going to happen. Yeah, Lincoln. Okay, you cancelled your mistake. And if you are in trouble, if they do give you any hassle, then just maybe email them and explain that you made a mistake and you've cancelled the mistake immediately. And then maybe they'll let you off with it. I know on a cash accounts, I used to do it all the time on news events. It was just something I did. I'd zero the thing. So if I had a buy and I saw the news event coming, I'd put in a sell for exactly the same amount. And then if it went into sell mode, I'd just sell the buy and let it take the sell down. And that was my quick trading. There was a stage in my life where I did that, where I went through quick trading and news and 5-minute charts and all that sort of stuff. I just don't do it anymore. Okay. Thanks, Kevin. Sit on your hands and break your fingers with the brick law. That's my saying. I love it. I traded Palladium yesterday after waiting for a week for the setup. I had 3% on it yesterday. I think you always wait for a good trade. Yeah, Lincoln, you wait for a good trade. I'm not a big fan of Palladium because I think the liquidity is a bit slow, but you wait for a good trade. No matter what the product, you wait for a good trade. You don't just take it. Like here this morning, the US dollar, Canadian dollar, we waited for this trade. I could have taken it up here and been impatient and had FOMO. And I could have said, I need to take this trade, I need to take this trade. And I could have taken it up here at 145 and I would have made all that profit down. But I prefer to be patient, wait for the trade to say to me, you know what, the trade's playing out now, take the trade. And that's what you do. This euro US dollar, see like here as well. I will wait for it to break through this trend support and give me clear signal that it's changing direction and going short. I won't trade into it at the moment because it's still bullish. Even though there's triple top here, quadruple top in fact, I'll still wait for confirmation. Wait for the trade to come to you. No rush, guys, no rush. Brent crude oil. Everybody's calling it long. All you guys are looking at this supermarket mentality. Remember what I told you about supermarket mentality? There I go, knocking my things off. Put it back. That's to stop the noise going through. The supermarket mentality is that looks cheap, so I'm going to sell it or I'm going to buy it because it looks so cheap. But what you got to do is wait for the market to tell you 100% that it's turned and it's going the other way. Okay, anxiety, the best way to get over anxiety is to trade within your means. Okay. Anxiety is definitely caused by trading out of your means. So what I mean by that is trade where you're comfortable. Now, I know when you're brand new to trading, even if you're losing $1 or 1 rand or 1 ruble or whatever, that's painful because you're losing and you don't want to lose anything. But what I mean by anxiety is if you're trading far too much. For example, you've risked $1,000 and it's far too much for you. If $1,000 is far too much for you, risk less. High stakes trading is not for everyone. It's only for a few. Okay, so you learn to trade more as you get older or as you've been in the game much, much longer. Seeing red can be psychologically damaging when you've got real money in the market and then you've got too much money in the market. I mean, if you've only got $10,000 to your name, risking $1,000 could be quite a lot. Maybe you should only be risking $100. That's my point. So, you know, it really does kind of depend how much money you've got available to you and your family over a period of time, how much money you've got in your bank account, how much you're prepared to risk at any one time. And even then, even if you've got tons of money, sometimes risking more than $1,000 can be too much. You know, just because you got $10 million, does that mean you're prepared to risk $10,000? Not necessarily. It might still seem like a lot of money to you. So risk what you are prepared to risk. Risk what you can. And the best way to test it is take a trade and set your stop loss, set your take profit. If you can walk away from it comfortably and forget about it, you're in the zone. If you can't, you're out of the zone. If you can't leave this computer screen, if you're constantly checking on your phone, if you can't resist the basis of I need to follow it, do yourself a favor. For example, I left this on, close it and forget about it. Can you do that? Can you even close it and not look at it? Can you not look at the trade? Is it possible for you to do that? Because if you can't do that, you've traded too much. That's how you get over anxiety. So anxiety is very much linked to the size of your trade. And when you started, Lincoln, it's even worse. When you first trade, when you really in the beginning, just putting money in the market is nerve-wracking. I mean, just taking that first investment is nerve-wracking. We had to do it manually back in the old days. I mean, that was totally nerve destroying, you know. But once you get used to it, it's second nature. Okay. I was very anxious. Shane asks, a problem of making your stop loss too tight. Any advice on good stop loss placement? Yes, I'm going to give you that advice right now. And guys, by the way, if you have questions during the week, please feel free to place them in the comments. I might not be able to answer them properly in the comments, but I will try to answer them, if not in the members videos, at least in one of the other videos or on the live shows for you guys during the course of the week. So making your stop loss too tight is because you're just choosing a stop loss. What you need to do, for example, here's Brent crude oil. Let's say I know you're short on Brent crude, Shane, but I'm just going to say, let's say you were taking a long trade because that's risk to reward is good on a long trade. So if you're a short-term trader, it becomes a little bit more tricky. But what I do is I say, I see the price is at 17.83. I want to take a long trade, and I'm looking at this. My first thing I do is I look at, if I looked at this trade right now, if any of you guys looked at this trade right now, where would you deem the trade to be invalid? Where would you deem the trade to be, it is no more? And in my opinion, that would be at around probably 69, maybe 68.75 to be safe, just down here. And that's the area where I would say it's gone below the support. There is no more support. It's probably below the lower trend. Let's have a look at the lower trend just to make sure. And you can take it down there and say, like, if this was to, I'm just going to prick that up a bit. And if I look at that, yeah, it's pretty much below the lower trend. So I'd be pretty safe taking my trade and putting my stop loss at around 68.70, 68.75. If it gets to that level, then this trade is no longer valid. Now I have my stop loss level. Now I can work out the size of my trade back to cost. And I want to risk $250. What I'm going to do is work out how much of a trade I can take back up to there. How do I do that? Well, there are many ways to do that, but one of them is to say, well, I want to buy. My stop loss would be at, wow, 54.31 is a bit low. But my stop loss would be at 68.75. And then I can work out my risk. And I want my risk to be at, for example, I want my risk to be at, there you go, $223, say, and that would be my risk. So I'm saying I'll take this trade at a buy at 71 with a stop loss at 68.75, which is going to be an area where I know if it gets there, I'm over. I mean, this thing's going short, right? So I've decided that that's an invalidation area. Now I work out how much is $226 back to my cost. Now I know the size of my trade. The size of my trade is 0.1 lots. And then I can just check if my take profit will be suitable for that. My take profit is at 78. I'm just going to use 78 as a round figure. And yeah, look at the risk to reward, 700 to 225. That looks like an amazingly good trade for anyone. So if I was to take this trade, I would say, okay, let's place an order. And there you go. Oops, we placed an order. Okay, guys, we own Brent. We went long. Sorry, Shane, you short, we're long. I took the trade, but it's okay. All right. So now we've taken a Brent trade and with a stop loss at 68.70 and the take profit at 78. Okay. Let's leave that in and see what happens. What the hell? Let's just leave that trade in and see if it works out. Okay. Right, so Shane's, I guess a good one would be to lower your size, place stops on higher time frames. You're probably right. It's low. I often get it wrong. True Tarkov, thanks. I trade spot and Brent so much I'm going to buy myself a cowboy hat and change my name to JR. JR sounds good. I like JR. Try buying and selling crypto. It's nerve-wracking with exchanges, hashes, and million kinds of wallets and nuts. Shane, thanks, Rob. Yeah, okay, so, all right. We've gone long. Okay, so we've taken the long side of the trade. I'm going to leave it in, guys. I'm going to leave it in. That's how we take a trade. That's how we work it out. And now you guys know how to work it out. Risk to reward is something you have to look at. So the risk to reward on this, the reward is all the way up there. The risk is here. So the reward is looking good in comparison to the risk. And there's a trailing stop on it, by the way. I've left a trailing stop on it. So if it pulls it through here and it comes back and takes it, it's okay. We take a profit. So no big deal. So Shane, I'll remember that in future. Guys, everyone on the channel, the A team, we do the opposite to what Shane suggests. Okay, there we go. Shane said so here. Always best to do the opposite. All right, now that's great. Okay, now fantastic. So yeah, we actually got 2 trades opened here on the live show. Can you believe it? All right, so that's good. That's good news. We got some trades for this week. That's excellent. Trade of the day. Guys, let's just go and have a look here quickly at the statement for the week now that everybody is here, because some of you may have missed it earlier. I'm just going to have a good old a good old quick look here. So I just left the news on there. So, and my photograph is in front of Trompi's photograph, so you can't see him, which is fine. Statement for the week, for the last month. Last month we started off with 3 losses. Then we had some trailing stop wins, 53, 70, 79. Then we had a break even, a 729 win. We had a trailing stop win, another trailing stop win, which was 1-1, 260. Then the US 500, which I closed out because it was a weekend, and we lost on that. New Zealand dollar, trailing stop win. Euro Great British Pound, because my gut feel was it wasn't going to work out, sold it for a small loss. And then Aussie dollar, trailing stop. And then gold was a trailing stop on Friday because I didn't want to hold it over the weekend. So that left us with a profit for the month. Not much of a profit, but a profit nonetheless, $360. And that's on our funded account. So the funded accounts, we've got a 25k account, which costs 89, which cost 100 when I wanted it, but it's 89 now. If you guys want one, there is a link in the description. Trade of the day. If you didn't get it, there it is. And trade of the week, if you didn't get it, there they are. Okay. And every weekend I kind of go through the week trades now, and I make a video for you guys, which will come out on Sunday or Monday, so you guys can watch it and see what the best trades are for the week. And you'll see here, Euro US dollar, I had buy for trade of the week. Leaves me with a little bit of concern, because if I go and look at it, I don't think it looks much like a buy at the moment. Let's just go back to it and just go and see. Euro US dollar, I'm just going to go back to it and just have another look at it here, because we did say that it's more short than long now. But now that's interesting, because I called it as a buy for the week. And let's just see. Now, you just remember, when I call something, sometimes I'm waiting for something to happen, or sometimes it might still have a bit of downside before it has upside. But there you go. It's got a huge green candle on it. I called it off a buy off of some level here, off of these levels. So let's just go down to the day. And on the day chart, you've got these levels. So it's bouncing off those levels and heading to the upside. Okay. It may already have reached its target for the week. So that now changes. That weekly target now changes. I'm looking at all these tops here, and they are of great concern to me. Even though I've got my resistance up here, all these little tops here, they're telling me this thing's hit a top. And it's probably going to turn around and head in the other direction now. So that weekly call is now no more. It has changed. Okay. I think I'm going to call this short. And this is, Shane, you're right. But I'd like to go the opposite way to you, Shane. But I can't, because this is really going to go short now. Look at it. Okay, let's let it go through this trend support first, and then we'll call it. Okay. So what do you think, Kevin? Shall we go the same way as Shane? Go short on the Euro US dollar? Yeah. No, totally. Crazy sometimes. You know, sometimes in the markets you actually feel that way. It's a psychological thing. The one thing you feel is that the markets are targeting you and looking for your stop losses and taking your trades out and what have you, and it knows what you're doing. It's like the market's following you around and watching you in bed and watching the TV in the lounge, and the market's watching you. It knows exactly where you are and what you're doing. That's one of the feelings. The other feeling is just do the opposite to what I do, because I always get it wrong. Okay. And you know why you get that feeling? You get that feeling because the market's a 50-50 game. There are many traders out there who follow the strategy that I promote. I showed you just now with a stop loss and taking the profits. Follow that strategy to the T. There are many traders out there doing that actually have a 20% win rate. And they make money. So don't discount yourself. Take 8 losses. You make 1 or 2 really good trades, boom, it's in the bank, guys. You know, I base my trading life on things like, for example, if you can trade the VIX, and I buy it at 15 and I leave it, And when I look again, I've made 50 grand on it. That's what I'm looking for. That's the one you're looking for, guys. You know, US 500, if we buy this thing at the bottom, or Bitcoin, if we buy this thing at the bottom and you leave it and it goes, you're going to make huge sums of money, guys, huge sums of money. I don't even want to tell you how much. You know, that's the patience of the game. You can trade in between like we are now. We can take a US dollar CAD sell. We can take a Brent buy, you know, and we'll make a few bucks here and there and it'll be great. But there'll come a time when this guy here goes down to proper levels down here or further, and you get into that buy and it goes all the way back to 6,600. Put enough contracts in there, imagine how much you're going to make. Bitcoin as well goes down to 70,000. You put enough contracts in there and it goes up. Imagine how much you make. Those are the ones you're looking for. Those are those big trades that you're looking for. You don't need a big win rate. You just need those trades. Believe me. Kevin, I thought you got a new desktop, man. Goodness, how can your desktop be in the IT repair shop already? I must tell you though, Kevin, I actually learned a lot about IT because I owned 2 computer shops at one time. And one in one mall and one in another mall. That's same name, okay? And they were repair shops more than anything else, and we sold laptops and computers and all that sort of stuff. And I had technicians, and I learned so much from those guys. I build my own computers now. If I buy a computer, I don't go and buy a PC. I buy the parts. I order them online. I order the motherboards and the memory and the CPUs and everything, and I build it myself. I put it together and I set it up myself and make it work. I still get frustrated with Windows though, but yeah, I learned things about, for example, people were paying for a hard drive double for an Apple hard drive than they were for a normal hard drive, and they're exactly the same. Did you know that? Bet you didn't know that. Yeah, it's the same part number, the same everything. You buy a Seagate, you buy a Western Digital, whatever, it's exactly the same. You know, it was crazy. So there was a lot of things that I learned about PCs owning those computer shops. And I can tell you guys, it's not that difficult. It's actually one of the simplest things I ever had to put together because, you know, when I was a kid, when I was like 16, 17 years old, I learned to be a mechanic. And let me tell you something, putting a car together is 1,000 times more complicated than putting a computer together. Very easy. Yeah, I learned a lot. I learned a lot from those technicians, how to do it, how to put it together, how to make it work, and it was quite good. Only audio says enter on the 0.705, exit on the 0, stop loss at 1. Just Unholy Audio is your handle. Could you explain to us what you mean? Enter 0.705, exit on the 0, stop loss on the 1. We're not with you there. Well, I'm on a different planet there. Shane, Kevin, go Apple. My desktop's 12 years old, nil issues. You know, Shane, Apple is insanely good. And also, like even on your phone, for example, your mobile, I only use Apple there, Apple tablets, you know, that sort of thing. You don't get viruses or anything. It's insane. Yeah, Apple, pretty good. They do have their downside. They're very good with visual and that sort of thing. Pretty good. I do find sometimes they run a little bit slow, but yeah, they're okay. They're actually reliable, very reliable. Yeah, look, and also, you know, Kevin, that's another thing. You know, you look into Apple next time because you can afford a new one. What I have found with computers, for example, is you'll pay 3 times more for an Apple computer. And if you pay that much more for a Windows computer, you're pretty much going to get the same quality. So, you know, that's why we go wrong, is we pay a lot less for the Windows computers, not realizing that you're paying that much more for the Apple computer because it's got that quality that goes with it. So if you want to pay that much more for a Windows computer, you get the quality that goes with it as well. You still got the first watch? Wow, it's insane. Well, I'll tell you one thing about Apple and when there's the arguments that I had with people in the past about which one's better, especially with phones. Let me tell you something. The guys, the first time I got an Apple phone, I didn't have Apple computers myself then. I was using always Windows computers and what have you. And at that point, I got my first Apple phone and I realized how much easier it was to use than the others. All the other ones, you've got to go through so many directions to get to anything. And Apple, it's one button, straight in, straight there. And it was so much better. Since then, I've never had anything else but an Apple. Geez, if it's been in the shop since Friday, I would get worried. Goodness me. Fibonacci levels. Okay. All right. I was just trying to figure out what you were talking about there. Okay. When it comes to Fibonacci levels, let me just show you guys quickly because the handle Unholy Audio just mentioned enter 705, exit 0, stop loss at 1. How Fibonacci levels work? Okay, Fibonacci levels work in a different way. What you've got here, I'm just going to the downside quickly, and let me see if I can make it a better color so you guys can see it again. These are Fibonacci levels. You see where these levels are, right? What you have to understand, between the 50 and the 61, between the 50 and the 61 is the golden zone. The golden zone is really important. So if a price gets into that golden zone, it's most probably going to change. It's most probably going to turn around. So the 61.8% level is insanely important, and the 50% level is insanely important. So if this goes back up and it goes into the 61.8% level, that is where you want it to be for your turnaround. That's what you're looking for. So in other words, if for example, this trade goes well and it goes long and it gets to that level, I need to start looking at the levels, even though my target's up here. My target should actually be below that 100% on the Fibonacci. So there's another level in here that I believe you're talking about, the 0.705, maybe up here. That's up here. That's a long way up. And then there's the 28 over here as well. That's also normally in there as well. I don't trade off those levels. That's why they're not in here. They're too close. Okay. So what we're looking for is for this to come, goes through the 38, and it goes into here. It could turn around there, but most likely it'll get into the golden zone. The golden zone is incredibly important. Look out for the golden zone. That's where things move and change and turn around. Okay. We call it the golden zone. But I don't want to confuse you guys with Fibonacci. I don't trade Fibonacci. Okay. It's just something that I do. Okay. Audio on which currency? 705 is said to be the golden entry zone. Yeah, no, the golden zone is between 50 and 61.8. Yeah. Yes, I do have a video about Fib. I put 2 out, I think. I put 2 Fib videos out. I don't want to put too many of them out. Yeah, you can hear a lot of things, but audio, the 618 is the, you gotta just know, okay, that the 61.8 is the level, okay? It's been the level for 1,000 years, okay? Don't let anyone change that for you. That's the level, right? 61.8 to 50. That's the golden zone. It's been that way for 1,000 years, and it's not going to change because someone suggested something else. This level works. This is the level that works, okay? It will always, always, always work. Don't try and change it. Don't try and do something different. It's if you want to use Fib, use it properly. And that's the level to look for, okay? If it breaks through that and goes to the next level, then that's great. Then you can play off that level. Difficult for it to get there. So those are your levels that you're looking for. Those are the levels that you're playing with. if you're playing with fib. Okay. The golden zone remains the golden zone. Okay. Unless you're confusing something else, but yeah, it's the 618. That's it. That's your zone. That's the one you're looking for. That's the one that's going to make all the difference to you. And it's just, if you go and read up about Fibonacci, and it's all about, the numbers on the planet and all the rest of it, and how things always work out that way. Now, there's been many a time with our system with support and resistance and trends and stuff like that, where I've drawn a Fibonacci in, and you'll be surprised how many times it's in confluence with our levels. It matches our levels to the T. So yeah, you can use it. It actually does work. I like Fibonacci. I'll never be against Fibonacci. It's always going to be a goodie for me. Cool. So guys, I'm going to now head on my way a bit. You guys have seen how to work out the trade size. You know the strategy. You know what's going on. You got to come back on Thursday for the next live show, which is at 2:30 GMT +2. It's been fun. I enjoy being here. This is excellent. Tomorrow I'll have another really fantastic video out for you guys so you can enjoy yourself. And as I've said to you guys, everybody's calling for a crash. The market is not in a giant bubble, as everyone says. It's still in kind of in its structure, and I don't think it's going to crash just yet. I think it will probably correct down to these levels, worst case down to some more further down levels, but it might roll over a bit, but it's not the end of the world. This is not 2008. This is just a bit of the norm. Our market has corrections. It normally has corrections, and a normal correction is 10%. A good 10% is healthy. Even 20% is not unhealthy. A crash is normally over 33%. Then we're in crash zone. Okay, so guys, I'm going to thank you guys, and thanks for coming. It's been fantastic having you here. I see there was a few people that haven't been around. I think you better get your computer back, Kevin. Go and kick their butts and ask them what the hell's wrong. It's not that difficult to fix a computer, let me tell you. We normally would... My technicians in the old days, I remember they would fix a computer in a couple of hours. Just come in, do a few tests, boom, they had the answer. So yeah, it shouldn't take them that long. I don't know what's going on with those guys. But anyway, go find out from them what's wrong and get your PC back. So yeah, I'll see you guys on Thursday. Thanks so much for being here, guys, and thanks for watching. Have a good trading day. Have a good trading rest of the week.